So we're looking at why are we long here, right? So we got in long, and this gamma glob from down here is consistent, right? There's a nice runway. It's not a huge gradient. In fact, it's relatively flat when we look at the net OI on the 0DTE. We're back to call dominated on the structure. So there's just a lot of things that are working out in our favor. It doesn't mean we can't go down. It doesn't mean that at all. But what it does mean is that we have knowledge that probably we can play upon, and that's what we're doing. So when we look at NetStat, and I go down to the SPX channel for NetStat, and I open up the latest one, it looks like this. And so now I make that bigger so you can see it. So still locked horn condition in the money call, in the money puts. So we don't have a lot of upside speculation going on in the 0DTE. You can see that 02, 02. So basically it's just the net stat for the single day. You can see all the zeros are here, so it's all pointing to the same day. And you know, delta is delta, right? So it's hard to make progress under this scenario. We need something else, and we're going to go look at vol M and vol D here shortly. You can see 193 due to decaying puts underneath us, and you can see that calls in the overhead are decaying, and right now the overhead call decay is stronger than the charm support due to the charm decay here. Both of these numbers, if price didn't change, both of these numbers are going to continue just to get smaller and smaller because they're decaying, right? So for all intents and purposes, they'll stay in the relative ratio or balance that they're in. A couple things are important here. As vol collapses, look at this. We've got Vanna on the right side, on the right-hand plane. That is, if we get out of the money, calls going in, we'll start adding air and gasoline onto a rally. Doesn't mean it's going to happen. It just means the conditions are setting up where as puts close, the influence of this on the left side, and as calls open, speculation, greed, we start amplifying the effects when we have a decrease in volatility, right? Look at the imbalance and just know where we are in the cycle here, right? This is probably the important thing. Looks like we just pulled back to 59.25, by the way. So if you are, okay, you want to be really careful here. You want to be really careful about that 59.25 strike. Sorry to get off topic here. Okay, so we're there. And by the way, reason that 59.25 is so important, it's right here on this intraday transition. We've got to see buying step in here. If we don't see buying step in here, then we'll close our longs for a loss. Right now, I'm not looking at that screen, but I know it's lossy right now. Yep, here we go. All right, let's get out of this thing. Yep. Ooh, that's a loss. Let me see what we can do here. I might. Looks like we're holding this 25. I'm gonna keep an eye peeled on this. So I've got naked longs right now from 25. So I'm right at break even. Not on the position, but at the strike, right? So I don't want this thing to get too aggressive to the downside, that's for sure. Okay, so our thesis is that this is going to continue up. So let's go look at vol D and vol M. Let's start with just vol M because it's kind of the summary of what we get in vol D. And so as I look at this, so first of all, for all intents and purposes, very, very tight distribution on the puts. The calls, not as tight. We had some action going on, but you can see everything is pointing to the upside. All right. So inside DS, we're small. small in size, right? So, okay, now we're losing 23. I need to close this for, or at least go short. Let me go short here. All right, we're down to 20. All right, this is getting dicey. I'm gonna go ahead and trade that. Sorry, folks, I'm trying to walk and chew gum here at the same time. This is a hard one. All right, sell to close. Yeah, let's get out of this thing. Ooh, my limit. It's walking away from my limit. All right, I need to readjust this. Yeah, just bear with me, folks. All right, we're below the 15. We're coming right up on what I would consider where we would probably go short for the day, or for short on the trade. Yep, here we go. All right.
Are you talking about short for the day on SPX or the VIX?
Yeah, short for the day on the SPX. All right, I'm out with a pretty good loss. That didn't work out. Okay, so we're below right now. We're at 09, so that's a problem. We just basically introduced back into the equation this short control, or this put dominated strike right here, and looks like we had a pretty strong reaction across 15. Let me just refresh this just so we get a paint of that. So yeah, so here we go. We're heading down. What's my VIX doing? Okay, VIX is only down $1.50 per contract, so I'm not worried about that. VIX is holding steady. So I made a mistake there. The mistake was I put my limit too aggressive against what I'm going to perceive as a dealer adjustment off of 59.25. So why I say that, so I was long at 59.25, right? So I got back long in this area here, and then we did this, and I was expecting a reaction, a little more support, and we didn't get it. And when you don't get it, when you get these stacked bars like this is most likely the dealers were getting too long, and which means puts were most likely opening and calls were closing. So this is a fairly strong reaction down to 5,900. Let's go take a look here real quick. So yeah, so we're in this. This is why drunken sailor is such a dangerous thing. If you're not skilled at quick responses, and I obviously just demonstrated that I didn't get out of this thing fast enough. But if you're, let's go back here. When you're inside this yellow box, this is a dangerous area, right? So 5,900's right here, just to get everybody kind of tuned in, and right now we're at 5,900. We're literally right here at this, where this line is right here, right? And so we've undone all of this. We're squarely inside of the GEX transition right here from early morning from the pre-market, as well as inside the DEX. And I said I wasn't going to play inside that range, right? So I took this long right here, and I said I was going to turn it into a vertical by selling this. I should have done that. That would have limited my downside in that. And so that was probably a mistake, not limiting my risk. And so I got out when we were down here, and when you're on a naked call to do that, that's always a problem, right? So we're down, let's see, 59.02. I am not playing in this zone right now. There's just not enough edge in this area, right? We could just bounce around like a drunken sailor for a while in this area. So this is a delta node. That's a delta node. It's offset by positives on either side, and this is really small. This is the noise measurement level. So there's actually nothing saying we can't test 58.85 here or something, which would be minus trans. So with all of that said, what's my VIX doing? VIX, $2.50 down per contract. So that's a yawner. Let's just go look here real quick. That's not what I want. Let's go here. All right, so we're still in backwardation relative to, so this right here is literally where the futures are, right? So 1723, and we can see that VIX cash is 1752. The anticipation is that either the futures will move up, and I don't think that's happening because we're seeing the entire term structure for all tenors move down, right? So that tells me their vol is coming out of the complex. And it tells me that VIX is just reacting to the short-term noise, why it's elevated here. So I'm of the mindset that this is going to continue to come down. And so my 18 puts that I have on for next week expiry are probably safe, and I'm just going to hold that. All right, looks like we bounced off 5,900 SPX. There's, other than it being a Livermore level, there is, in my view, there is really no major reason for that except that it's a node. It was just a buying opportunity. So let's go look at volume and Valdi, because that's what we were doing before. All right. So that downward move in the call centroid has pulled the ROC down, right? That's a big negative number right here, this minus 0.379. That means this green line is coming down. So the optimism of breaking 6,000 is coming. I don't think we're going to break 6,000 today. And if this trend continues to the downward side, then we certainly aren't. We also see a negative on the puts. They're transacting to the lower, 58.58. So this was transacting at 59.49, 58.58. So knowing that SPX generally doesn't exceed these little dots, we have sense of where we're going to transact. The general trend as of right now, 10:27 Eastern time, is upward. But with everything coming down, we have to take a look at that. And I'll just say, this tells us, this is the ROC, this is the slice over slice ROC, clearly red. So we're pulling back. So it would not be out of the question that these could reverse downward. It would not be out of the question at all. Okay? So don't for an instant think that because we gapped up and because we failed to get over 30, first of all, right? So I've got a fairly significant loss there that I have to deal with. 1% equity total, to be in full disclosure, less than 1%, but close to 1% equity. But I do 2% max risk on these things, so I was only at half position for an opening position anyways. So that part's fine. I think VIX is going to come in and save part of the day. These are falling. There's a good likelihood that if we get the ROC continuing to do what it's doing, it's going to continue to come down. So we'll just have to watch that. And then if we look and see what caused that volume pullback, or what caused that pullback, we can look at volume. So here's that dealer adjustment down, or presumed dealer adjustment down, and it looks like puts got engaged. A little bit more put volume. It looks like perhaps some profit taking. Also, price confirms what you see in volume. Price confirms what you see in volume. We see volume on the put centroids going up. We see volume on the call centroids going up. Puts larger. It's probably opening puts. Probably. We don't know. Volume doesn't tell you direction. Don't ever in an instant think that it does. But price confirms what we're seeing. So let's see if this bounce holds at 5,900. If it doesn't, then what? Well, then we're going to be looking back to the 80 area, right? And that 80 area, 80.85 is right here, and things could start getting really dicey as we start moving around. So I am not going to play a loss of 900 yet, 5,900 yet, only because we got these zeros in here and we could easily bounce off of the 80. You might be able to argue that these are so small and insignificant that we're just going to continue down, especially if we see put volume up. I don't know the answer to that. I'm not going to play until my edge exists right here, right when we get up on this ledge at 58.80, and then I'll play the downside. And I think there's going to be a downside gradient. Let's see if we can go find it. I think there's a downside gradient then. We'll play flat until we get down to 58.60, which will be a first profit target. I'll take some stuff off the table. And then if the puts are still really rocking and rolling according to volume, then we'll see this gradient push down here, perhaps all the way to 58.50. So yeah, let's see what happens here.